Family, this is huge. Iraq is officially talking about asking the U.S. Treasury for permission to go 1-to-1 with the dollar. You heard that right. 1 dinar equals $1. This isn't speculation anymore. This is being discussed on Iraqi television. If they're asking permission, that means they're ready to show the new exchange rate, release the lower notes, and float the currency. Once that happens, Iraq could be on its way back to that historic $3.22 rate, maybe even higher. Stick with me. I'll break it all down right here. Don't forget to like, share, and subscribe. Let's go. In a stunning revelation coming straight out of Iraq, local television networks have begun discussing a historic financial move. Iraq's central bank is reportedly seeking permission from the U.S. Treasury, Britain, and France to take the Iraqi dinar to parity, 1-to-1, with the U.S. dollar. This is not rumor. This is being talked about publicly on Iraqi television, and that alone has sent shockwaves through economic and currency circles worldwide. Why would Iraq be asking permission to go 1-to-1? Because that type of move doesn't just happen overnight. It signals that something massive is about to unfold, something that could redefine the Middle East's financial landscape and rewrite the global currency game. The CBI's next move, lower denominations, and the float plan. For months, whispers have circulated about new lower denomination notes, the smaller bills meant for everyday transactions once the value of the dinar rises. Now, as Iraq moves closer to revealing its new exchange rate, the timing couldn't be more critical. The Central Bank of Iraq is reportedly preparing to introduce these new notes to the public, accompanied by the announcement of a new rate that would start at or near $1 equals 1 IQD, a stunning leap from the current rate of over 1,300 dinars per dollar. Once permission is granted, sources suggest Iraq plans to float the dinar, allowing its true market value to adjust naturally based on global demand and investment inflows. This move could catapult Iraq into a powerful revaluation phase, driving the dinar's real effective exchange rate toward the reinstatement level of $3.22 and possibly, according to optimistic projections, as high as $4.25 within a managed basket of currencies. Why ask permission? Because it's global. When a nation restructures its currency, especially one tied to post-war reconstruction agreements, it's not a solo decision. Iraq's financial system has been closely monitored by the U.S. Treasury, the IMF, and major Western financial institutions since 2003. So when Iraq goes public saying it's seeking permission from the U.S., Britain, and France, that's a direct signal that the country is moving from dependency to sovereignty, a transition from control to economic independence. This coordination also ensures global stability. A sudden 1-to-1 exchange rate shift affects international contracts, oil pricing, and cross-border trade settlements. So, asking permission isn't weakness, it's a confirmation of legitimacy. It shows the CBI is ready to make a calculated, globally accepted move. The strategy, float and rise. The talk of a float means Iraq intends to allow the market to set the value, a bold strategy used by many countries transitioning to strong, independent economies. Here's what it means in plain language. The CBI sets an initial rate, for example, 1 IQD equals $1. Then the market takes over, driven by supply, demand, oil exports, and foreign investment. As investors pour money into Iraq, the dinar appreciates naturally, potentially moving up toward $3.22 or even $4.25, depending on how strong Iraq's balance sheet and reserves remain. It's not just about numbers, it's about economic confidence. Iraq has spent years cleaning up corruption, stabilizing banking operations, digitizing payments, and building gold and currency reserves. Now, with these foundations in place, the CBI can finally act from a position of strength. Why this is enormous. A 1-to-1 exchange rate would instantly change the lives of Iraqi citizens. Imagine overnight, the average Iraqi's paycheck suddenly doubling or tripling in effective value. The ripple effect would boost local businesses, increase imports, and fuel infrastructure growth. For international investors, this shift would be the green light they've been waiting for. Billions of dollars in private investment, long held back by currency instability, could flood into Iraq's markets, from energy and agriculture to tourism and fintech. And once Iraq's dinar starts trading freely, even partially, global institutions and forex markets will take notice. Iraq's massive oil reserves, now paired with a strong currency, could reshape the global energy economy. Where this leads, the return to glory. Let's not forget, Iraq's reinstatement rate (RI) before the 1990 sanctions stood around $3.22 per dollar. That figure wasn't imaginary. It was the reflection of Iraq's immense natural wealth and production capacity. If Iraq indeed moves to 1:1 and floats upward, the long-term goal could very well be a full return to that historic rate, or even higher once tied to regional trade baskets and digital payment frameworks. And with oil, gas, and gold production surging, and a new wave of economic reform laws being debated in Parliament, Iraq's financial comeback story may finally be reaching its most powerful chapter yet. Final thought: history in the making. What we are witnessing is not just currency reform, it's a national rebirth. Iraq is standing at the threshold of economic sovereignty, ready to join the world stage on its own terms. When the CBI goes public, when the new notes are shown and the exchange rate unveiled, the shockwave will be global. The question now isn't if Iraq will go 1:1. It's when, and how fast it'll rise from there.